Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. On our last trade, we were able to buy in at a little lower price than the market, and within a day, market went up a little bit and we decided to exit. And what we're looking for is a lower price than where we exited again. So luckily enough, on this trade entry, the market did drop the following day. It actually gapped up a little bit and then fell by the end of the day, and Adam decided to go back in. So we're always looking to make a little bit better entry than our exit. As I mentioned before, these are live trades with real money, and we can watch that trade happen now. You can see an order go in and get filled. So of course the big question is what's going to happen the next day and what decisions are we going to make based on how the market's moving. Well, it turns out the next day, the market went up a little bit. And since things are kind of going sideways here, it's hard to tell if the market's going to continue to go up, if it's going to fall. You can see sort of the historical candles. It's a tough call to make. But Adam is going to decide to go ahead and make an exit here. So for the last two trades, we're buying at a lower price, selling at a slightly higher price, stepping out of the market, going flat. Price falls a little bit, we re-enter and scalp a little bit more on the profits on this trade. So, the strategy right now is to just take the profits where we can get them. And so far for the last couple trades, that's been pretty successful. I think in the last 4 trades, 3 have worked out, 1 hasn't. So pretty good track record there. But we're going to go ahead and watch this trade close. And we'll do that live, and you can see that happening now. And let's head over to our tracking chart to see how we're doing. Well, that trade closed on May 15th. The price of the S&P 500 was $412.93. That brings the year-to-date total for the S&P buy and hold strategy to just below 8%, 7.98. On that last trade, you saw we picked up 0.6%, and that brings our year-to-date total just below 12%, 11.83. One interesting thing to note is for the past 4 trades since toward the end of April, the S&P 500 has been relatively flat. And I think that's interesting because, from 7.9% here, the S&P really hasn't done anything. During that same time, we're picking up about 2%. So I mentioned that these buy and hold strategies, they're definitely good, but as we try and scalp a little bit, we're definitely picking up a little bit more. You can see this on our year-to-date gains. And I did leave in the 3 years running, I did leave the SPY trading in here now. That's still, there were no trades on SPY, so that percent return is still the same. But here's what I'd say. So far, we're beating the market by just under 4%. I think that's a pretty good run, and we'll continue to make our trades and hopefully continue to extend that gain. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only. It should not be taken or interpreted as advice. Until next time.